Welcome back. As we mentioned earlier this hour, Woolworths has posted a $1.5 billion profit for the last financial year, despite rising COVID cases and supply chain issues. Joining us live now is Rabobank Senior Analyst Michael Harvey. Michael, appreciate your time. Thank you. $1.5 billion sounds like a big number, but the CEO actually said the company's profit fell below their aspirations. What did you make of the result?
Yeah, thank you for having me. And certainly when you zoom out, you can certainly appreciate just how challenging the food system is at the moment. And, that's a global story, but even locally, we've had severe flooding and unfavourable seasonal conditions. You've obviously got supply chain challenges in all parts of the food system. You've got high food and energy prices in the background to all that, labour availability. So, it is a food system that's under pressure. And certainly, the story that everyone's talking about at the moment is food inflation. And that's certainly clearly got some runway to go, because when you look at the numbers, clearly it is, at decade highs. There's lots of drivers behind that. Certainly an expectation. We haven't yet fully passed the peak in terms of the food inflation story. And of course, it's coming against a backdrop of, a global economy that's slowing, consumer confidence under pressure, and there is significant, cost of living pressure in most households. So it's about that consumer behaviour that we'll be keeping a close eye in the months ahead.
Yeah, it was interesting to see that Woolworths said the price of its goods increased by 3.6%, and that was just between April and June. You said we haven't reached the peak of that yet. What is the time frame here in terms of, for how long this can keep going up?
It's a good question. I mean, if you rewind a little bit, certainly the June quarter CPI number is a little bit old now, but they were at decade highs. They sequentially increased since the March quarter, and it was broad based. When you look at when you're looking under the hood around the food inflation story, yes, there's some deflation coming through on fruit, which is good for consumers, but outside of that, there was pretty decent inflation numbers across all categories, and even since the June quarter ended, clearly we're still seeing further pressure coming through in terms of further price increases. So that's why you'd be brave to be calling the peak. We're probably not too far away, but I think the reality is it's going to be an elevated food inflation environment for a little while, because you've got high cost of production embedded across the food system. A lot of that is on farm in terms of high cost of production, in terms of fertiliser, feed, fuel, all the key inputs to produce food. But when you look further downstream, that's where you see cost headwinds everywhere as well. Commodity prices are still very, very elevated. It's expensive to get packaging. It's expensive to get product to market. There's labour availability issues. So that's part of the story here. There's certainly some expectation we might be nearing the peak, and certainly with fresh produce, particularly vegetables, which has been quite problematic. That's largely been local supply and weather-related issues. That should start to recede. But outside of that, packaged food, protein products, there are still some settings in place that are going to mean we're going to see high food prices for a period of time.
You mentioned a bit earlier that we are seeing customers responding to that surging cost of living in terms of consumer behaviour. What's changed? How are people trying to get around those price hikes?
Yeah, and certainly the narrative coming from retailers and FMCGs is that there are those early green shoots of consumer response. The first thing to note is, consumer behaviour around food purchasing has certainly started to normalise, and I think that came through in what the retailers were saying in terms of, big shops, big basket shops on weekends again, so a return to more normal shopping behaviour. But there's those early signs of trading down. So, consumers are tightening their belts. They're looking for value offerings, and that does feed through into certain things like, trading down in terms of the protein category from red meat to chicken and so forth, looking for, canned vegetables as opposed to fresh vegetables because of the pricing dynamics. So it's those early signs of trading down. But I think the reality is, the full impact on consumer really won't be felt for another, until the second half of this year and into early next year, because we're not past the peak inflation story with food, and the cost of living pressures are still building. So we're going to keep a very close eye on the amount of trading down that we are seeing, because most FMCGs have sort of been saying in the last quarter that, the consumer response and the elasticity to higher prices has largely been in line with expectation, but they are all cautioning, their investors in their markets that they're likely to see an increase in terms of consumer response. So yeah, a bit more belt tightening, a bit more trading down from consumers as they go on a hunt for value.
Michael Harvey, really appreciate your analysis. Thank you.
Thank you for having me.